I think what we want to do is talk about what are options for people, because let's face it, buying a house is not easy.
It's not easy.
Why is it not easy?
It's difficult. Well, I mean, first of all, you gotta get with a guy like Ben and get qualified to borrow some money. I mean, most of us, at least first-time home buyers, most of us don't pay cash, right?
Right.
Are we starting yet?
We are San Luis Obispo Real Estate Podcast with Hal Sweasey, but I'm gonna ask first, Jeff Kingman, how you doing today?
I'm doing great. How you doing?
The first time,
Jeff, you look great. I like the beard's looking
got
good.
the beard filling in.
and Izzy.
Yeah, you never know when you're on a job interview. That's what I say.
Oh, that's true.
Start dressing up.
Hal, I think it's he's trying to come to Team Swayze. Maybe
Yeah,
let's do it.
we got to
That
shave
might
the
be
beard.
more true than you know.
We got to shave the beard. We love everything but the beard.
No, we're not a New York
Yeah,
Yankees.
come on. What are you, Steinbrenner? Never mind.
Yeah,
He shaved his beard.
Shave the beard.
yeah, because my hair fell out with
Yeah.
chemo
Oh,
treatment.
jeez.
Jeez.
All right.
Let's
Okay.
not go there.
Never start with Jeff.
Yeah.
Now we're having fun.
Yes.
Let's go.
That just threw us a
Or
curveball.
never poke the bear.
come on.
Never poke
Do not
the bear.
poke the bear.
Let's talk about real
He
estate.
needs
Come
to
on.
introduce- How are people going to know who we are?
Hal,
Yeah, that's
JT,
introduction.
Bobbie,
We all
Ben
need
is back.
introduction.
Everybody's here. The gang. They see you on camera right now.
Thank
so.
you, Ben,
Hey,
for coming back, Ben.
If you
Yeah.
watched
Thank you.
last week, you know who we are.
Yeah, that's right.
Yeah, and Ben was awesome last week, so we couldn't not let him.
Thanks for making
back,
the commute,
yeah.
by the way.
My pleasure.
Down to
And
the
I just
studio.
want to point out that
Yeah.
I can grow a beard, and I should, because it's the only hair that I can grow.
Next time. Come
Okay,
on.
now,
hey,
now
James,
we're oversharing.
tell me-
Okay.
James, I want to point something out.
Uh-oh.
Something happened earlier this month that was very sad for me. Since we're talking about negative stuff here, Brian Wilson, Beach Boys. So guess what? Rain Spooner shirt is on today's
There
broadcast.
it is.
It's the surf cal.
It's the Beach Boys.
Beach Boys one.
Yeah,
Okay.
yeah. So
All right.
this is for Brian Wilson.
Okay.
Okay.
Well, that's
Yeah.
awesome.
That another famous musician passed away this recently. Sly from Sly and the
Oh
Family
yeah,
Stone.
yeah. Pittsburgh Pirates.
Everyday
1979.
people, right?
We are family.
Yeah.
Guys,
that's
this
right.
is what old people do. They sit around and they talk about the people.
Yes.
This is the obituary
We have-
episode.
Let's go surfing real estate now. Everybody's learning
How's
how.
your goiter? Is it okay?
Let's go. Let's get to work.
Let's get rolling.
Okay, so a topic this week we were going to talk about is kind of the affordability and maybe myth or fact, or
Okay.
let's talk about how.
Well, we did talk a few weeks ago about it's how hard it is to buy real estate,
Yeah.
and then and then John of course thinks we don't. We just say okay, and so he starts thinking, and he went down in his underground lair and started thinking on this thing, and then an article came out recently talking about again, not a productive article. It was a commentary, but I think what we want to do is talk about what are options for people, because let's face it, buying a house is not easy.
It's not easy.
Why is it not easy?
It's difficult. Well, I mean, first of all, you gotta get with a guy like Ben and get qualified to borrow some money. I mean, most of us, at least first-time home buyers, most of us don't pay cash, right?
Right.
So what we're really talking about is the difficulty for most people. It's around doing it the first time, right?
Mm-hmm.
I mean, buying a house the second time's not nearly as difficult as doing it the first time. Would you agree with that, Ben?
Absolutely.
And,
Yeah.
and a lot of us don't get a lot of financial education, so we're just learning on the fly. Right?
Correct.
So you got to be bold. Well, you said something earlier, which I was trying to fish out of you. The quote was, anything worthwhile
Oh, yeah.
doing? What?
Who hasn't heard that?
Okay.
If something's easy, everybody'd be doing it,
Right.
right? So, Bobbie, when you bought your first house, easy or difficult?
Difficult.
Difficult, of
Yeah.
course.
Yeah.
And you did it anyway.
Yeah.
Yeah.
And thankfully then. Yeah. I think that's part of it, is looking at, it does feel more difficult now. Is that accurate? Is it just like, what's going on?
Yeah, I mean, I may have a skewed version of that view. I think, so from my chair, from a lending perspective as a banker, it's easier now. We have so many ways of streamlining the exact process. However,
Thank you, Ben.
It's an easier process for borrowers, specifically first-time home buyers. We incorporate AI now for verifying employment, for assets. We have more programs. Money is fluid, as we spoke about in the previous episode. There's more money to lend out right now by banks and by institutions. So from a perspective of a person making the loans, originating, it's easier, and there are more options for the buyers.
Okay.
And that's good. Does that mean I think, if I may though, one of the things I think is so difficult is that it's unknown to so many people, and it's foreign. And I think that's probably the biggest barrier I hear regularly, is getting somebody to speak to me or to speak to a loan officer and just crack that seal and realize that my job is to help them. And that's probably the biggest challenge.
Yeah, it's a scary hump to get over, for
Correct.
sure. And then when you're thinking of affordability, it feels like prices just for the cost of living have increasingly gone up. Are they going to continue going up? There's a lot of uncertainty there. So are you having those conversations with buyers when they come in?
Yeah, I mean, I think John's expression of, when's the best time to buy a house is always relevant here. And that is, it's such a great asset class to own. And whenever you buy, it's going to do you well over time. So as far as getting in and buying and going through the endeavor, there's never a bad time. And once you do it, you're locking in, that's when you begin creating wealth for yourself.
Right.
I'm a bit jaded.
Yep.
1984, first house I bought with my wife.
Yeah. 18% interest rate?
Interest rates were averaging in 1984 13.88. So don't tell me it's harder now. It's hard. I'm like I said, I'm a little bit jaded. Yeah. It's hard. Yeah. It's hard every time you buy your first house.
Right.
But we're complaining about 7%.
Not even.
Well, and it sounds like you know about a bunch of, we would have to talk to you to know about the programs that you're talking about when you're saying it can be a smoother process. What are some of the things that people are coming to you with questions? How are you alleviating their concerns, or what kind of programs are out there that are helping them get into that first house?
Yeah, I mean, there are more programs than ever as far as first-time homebuyer programs, down payment assistance programs, low down payment programs. Obviously, the guidelines continue. When I talk about that there's plenty of money, that means that the guidelines continue to ease versus constrict. So things like source of funds, gift funds, all of that stuff across the board is just easier than it used to be and more allowable. And, it's when money is tight, programs, banks protect their money and they make guidelines harder. When funds are abundant, you see those guidelines loosen up and more people have the opportunity to buy. So it could be a higher debt to income ratio where they could stretch to a little bit more house than they thought they could buy. Whatever the case may be, it's a real individual process, but it's definitely worth speaking to a lender about.
It's funny, but I think this probably speaks most to a first-time buyer. Right, because the first time, and there's a couple of things I think that are at work, but people always worry about the crash, right? And it's funny because I think in 2006 I was talking to a buddy of mine and we kind of compared notes, and I would say 50% of the buyers in 2006 before the market went crazy were speculators, right? What's the percentage of speculators now? Buyers, flippers? It's minuscule.
It is.
Right?
Yeah.
So we don't have that thing where, no more speculators, there goes half the market, right? We had a bunch of supply. We don't have that anymore. And then you think about, well, here's just a question. I don't know if this is true or not, but I'm guessing the marriage rate is less than it used to be. Is that?
I think so. A lot of the partner rate is higher. So.
Yeah. Okay. Yeah. So you think about it. So that's a lifelong commitment, but making a 30-year commitment financially,
that's a lifetime.
That's a lifetime, right? So that part,
I always say that a mortgage is more of a tie together than a marriage.
Okay.
So
but you're still married.
Your wife's
okay. Good.
Yeah.
All right.
So when you think about the first-time buyer, what's more important, having 20% down or having income?
No, I think what's most important is just getting in the game. Whether you have a gift to get to 20% or your own funds, or if you have 5%, it's really just getting in the game, finding a price point that works for your budget, where you're not, drowning, not house poor, able to swim fine, and make it to the next year where it gets easier, and then the year after that where it's easier than that.
So you're answering, in some ways, I interpret your answer as income is maybe even a little more important than the down payment.
I think so. Yeah, it's finding out the right level more than the cash. Correct.
Yeah.
Did you know that the average Cal Poly business graduate makes more in their first year than the average Harvard business graduate? I read that recently.
I saw that too.
Wow.
That's a good one.
Isn't that awesome?
Right.
So if you're an average Cal Poly graduate in business and you want to stay here, you better make a little more then, right?
That's right.
But hey, look they're starting out in their early to mid 20s making $80,000 a year. You get two people together, two partners or spouses, whatever. There's $160,000. Give that a few years, and they may get close to that median home price. I read what was the income you had to have for a median home in this county?
I think we saw for a starter home in this county, I want to say it was about $140,000 household income.
Okay, so you got two Cal Poly grads that are sharing a house, and boom, you're there from the start.
Yeah, or two partners.
So if we're encouraging, which I think we are, because we feel strongly that real estate's a good place to be. So we're talking about actually, okay, let's, like when I got my first car, but it was $500, right? But would you better off having no car or sharing a car with your brother or sister? Right? Sharing a car.
Yeah.
So, you don't have to be in a relationship. You could just be partners. Like my two kids, I would say, okay, well, if we can help you, we will. But you guys, if you can't do it at all, you don't have a significant other to help out, then the two of you partner up and you live in the house together. Mm-hmm. And you start. Would you rather have, 0% of something or 50% or no percent?
Right.
And there's a between, right?
Well, and right now, I think the cotality number is, right now the
what number?
Cotality, which used to be CoreLogic, is I think they're
This is a website.
this is
I
a
was
gay.
just going to go with it. I don't know
Okay,
what you're
explain
talking
what you
about.
mean. You lost me.
This is an index to follow
Start
for home
again.
appreciation.
Yeah.
Okay.
And I think right now they have the 3-year prospect at 15% nationally right now. So
15%, five a year.
Correct. It's
Wow.
like 2% this year, and it accelerates over the next couple
That's
of years.
the highest I've heard recently.
Yeah, and they're actually the most trusted. They're the kind of the
Gold standard.
Mm-hmm.
Yes. So you had some example. You went to work on this. Did you
Yeah,
want to share those examples? Because I think this is really where the
I don't know. Did I share some of this last week? I don't remember. When I
the
talked
percentage
about
of income. No, I don't think.
I don't know which ones you're getting into.
you want to
Before
say
you
what-
get into
what
that,
income?
though, I
Yeah.
do think it's important to say if you're talking about things loosening up those restrictions, if someone was frustrated maybe a year ago, 5 years ago, whenever it was, the last time they maybe chatted with you, would you say it's a good time to kind of come back and revisit this?
There are more programs than ever before, for sure.
Okay. So that's just a good positive.
Yes. And Ben, just so those people that have never bought a house before and don't know, what is the commitment or the cost to get your knowledge?
I'm an at-will employee. My job is to serve you. There's no cost for my service. When you buy a home, I get paid. I'm a banker. I get paid through the transaction from the bank.
Free help. I
And
hear
no
free
commitment, no cost.
No commitment.
No cost.
No commitment.
Okay.
My wife keeps me like that all the time.
So, yeah.
So as we talk about income, as a rule of thumb, and I know you're probably going to give me a wide answer, but if you're talking to a first-time home buyer, what amount of their income, percentage-wise, should be attributed to their PI, principal, interest, taxes, and insurance?
Yeah, it's subjective. Some people have other debt, and so it's a real subjective. We look at
Let's take their other debt off the table.
Yeah, when we're looking
They
at
have
just
none.
the housing expense.
Yep.
Generically, I would say it depends upon the subjectivity. Then goes to what is their career. What is their career potential? What are they doing? If it's a new doctor in town and they just got hired and they're going to be sharing in the profits of the office moving forward and going, I'm going to tell them, let's go max. We want to get that. Buy the house that you're going to be happy with for several years.
You're a state employee, a Tascadero, Cal
If you're
Poly.
a state employee and you just have cost of living increases every year, we want to keep that more reasonable. We want to, maybe that puts it down in the high 30s or 40s or low 40% debt to income ratio, meaning your gross income to that housing expense. Yeah. And we figure out where a comfort level is that's still strained, but maybe not maxed.
AI says 28% when I look it up on you. 28% is low in your opinion,
In our area, it's not reasonable.
right?
Yeah, it could be in some areas in the country, but if you're in Wichita, that's great. In San Luis Obispo County, that doesn't work.
Yeah, my first house I was at 35%. And that was not taxes and insurance. That was just principal and interest.
Right.
And to your point, I was sort of betting on myself that a year, 2, 3 years later, my wife didn't have a job when we bought that house. So, the first year was, like Bobbie was saying, really tight. I mean, it was hamburger, not tri-tip, right? But by the third year, her income, mine had gone up. We were ready to buy a bigger house with a bigger payment.
Yeah, I mean, John, you're bringing up basically what I tell people. I hate quoting interest rates because it's the exact same thing you're saying. Everybody's situation is subjective. Interest rates are subjective based on the situation, and where that person will qualify for and how much they stretch is also subjective. Do they have inheritance coming, or do they have a trust if they need it? Do they have family support? Or is there a job like we were talking about, a doctor or somebody that just is on the up, a fast moving track? That will influence where we're going to talk about what's comfortable, and it'll influence them, and they know that. So everybody's a little different.
And what's the biggest challenge for a first-time buyer? Because entry into a market's always a challenge.
Yeah, actually,
is it
Hal,
income or down payment, or can you quantify
I would
that?
say down payment. I would say down payment is always a challenge for people. I think I see more gifts from family than ever before.
Great.
And I think that's a part of our business now, which is great. I have 2 kids. They're about to enter the buy a first home type of market in the near future. And I, as a parent, I'm happy to help with that. If that, they're going to be responsible for the payment and I get to help my children buy a home, it's wonderful. That's great.
We have a business coach, and he was talking about what's happening in demographics. Mm-hmm. So in the next 6 to 7 years, let's say, there's going to be about 79 trillion in wealth transfer, meaning old baby boomers like me and older than pass away, and that go, So, and talking about the fact that, and we talked about this a little bit when Albert was here, helping out, right? And what's the gifting rules? People always thought, about taxing a gift.
Kind of reminding myself of that. There was a great article in the Tribune in the last couple days that talked about that. And I don't want to talk about it too much because I'm not an accountant and I don't want to mislead somebody. But, today you can give somebody $19,000 and you don't get into any of the gift tax laws and all that. That's the limit. But I could give Ben $19,000, and my wife Dawn could give Ben $19,000, and I could give your wife $19,000, and Dawn could give your wife. So you can get a husband, a couple could get to another couple. What's 4 times 19? $76,000 in a hurry, right? And if I did it on December 31st, I could give you another $76,000 on January 1st, or I could give you the whole thing, just file a tax form, as I read this article, and it just comes off my ultimate
your estate
one-time exemption at death.
Yeah.
And which is $13.9 million. My kids don't have to worry about paying any estate taxes.
Yeah, and there's a variety. I've seen so many attorneys and CPAs come up with different ways to offset it. And it's important to know that when a lender does a loan and there is a family gift, we don't report that to the IRS. The lender does not report that. So
any gift at any level.
Any gift at any level. Okay. So it's really up to the family how they report it and do that. Yeah. So there's no set way that is done.
We're not accountants, but what it seems like, do your own research, is that is not likely a taxable event.
I don't think there's any CPA.
We don't know.
That's what I read.
Consult your account. Yeah, we don't know for sure.
But I beat up on the internet and newspapers all the time, but that's what I read. Well, I want to believe that one.
Well, and for example, too, what I call a gift may not be a gift to everybody. For example, parents may gift their kids 20% down payment, but then go on the title afterwards. Mm-hmm. Remember, the loan is the debt, title is the ownership.
Right.
And so from my perspective, that's still a gift.
Right.
From a tax preparer's perspective, being on title means you're an owner of that property. That's not a gift. You just gave down payment for a property that you own.
Yeah. Yeah. So there's lots of ways to get in there. So for our young people, go out there, get educated. For our elderly people that have children or not so elderly, whatever, give it up a little bit, help them out. You know,
Right.
I mean, you you helped your kids.
Both of them.
Can you
Absolutely.
share where the money came from?
Yeah, you know, they're going to get it when Dawn and I are gone, right? So why not let them have a little bit of it now where we get to watch the results of that? And certainly, like you were saying, having both your kids be homeowners at a younger age is certainly valuable to the psyche, right? Psychic
Absolutely.
income to me.
Yeah.
And financially.
But to your point, Hal, you know, when I die, there is going to be life insurance benefits. And basically, is I took some of the money out of my life insurance policy and helped them with the down payment. And so they're going to get less when I die, but they got it now. I think they'd rather have it now, and I'd rather see them have it now.
Yeah, better to give from a warm hand than a cold one, for sure.
Yeah,
So
yeah. And I don't need to legislate from the grave how they spend it. Just here.
yeah.
So what else besides consulting with you, they'll get a lot of input, but just to share, what else can we do to help people have a little bit more hope in their process of wanting to get a house? I mean, you shared some things, you have more experience on the financial side. What would you guys say?
Well, I mean, I think number one is just speak to a lender. You know, speak to me, speak to somebody you trust, family, friend, whoever it is. Speak to a lender, and there's no shame in not knowing the process, and you're not going to know it until you speak to somebody. So get with a lender and learn the process, get educated. And my job, a general first-time homebuyer meeting, is we go through the basic application, we create a spreadsheet, so we talk about numbers, and we talk about the flow of a transaction. What does it mean? How does it go? And then if they're working with a good realtor, like Hal, so then it's an easy process from there. I tell them, tell Hal, go show you some homes, see what the market has to offer. You're pre-approved. Go look and see what's on the market. And once they do that and they see a home, then the next phase is, of course, that delicate dance of, I don't know if this is our forever house, or I don't know if we love it. And I always encourage people, I don't know if this is the right answer for Hal, we'll be curious. If you're 50% or more plus for a first-time homeowner, I tell them to write on it. Get that first contract written, go through that process, and all of a sudden they're experienced.
Mm-hmm.
Yes. Yeah, practicing is good. I think, can I share with you guys what the biggest misconception I have with people approaching a lender?
Yeah.
Is they think they don't want to share any of their, dirty laundry. Well, let me get my credit perfect. Let me do this. Let me do that. It's like, oh, no. You're the coach. Like if you're not ready,
That's my job.
They're going to tell you what you need. Now you have a plan.
Yeah.
That's
Right? And otherwise you're just guessing.
But
I do
also,
hear
like
that.
you were saying with going to Chat GPT, and this is kind of the generation of, I don't want to have a personal conversation. I want to find and research and do it all first. But there's a personal buy-in too to working with a lender, and like even as a realtor, we know what that feels like. You will come up with things that the internet is not working for you. They're not invested. They're not genuinely caring about what happens to you. So getting someone's personal buy-in and them to be on your team through that, you cannot replace that.
I've never heard of Chat GPT having a fiduciary responsibility to a client.
Yet.
Hey, how
Let's
long?
try to find a good answer and just one answer. And there's many answers, right? I mean, seriously, when you're talking with, that is the nuance.
Yeah.
How
of
long is
HI.
how long is that first meeting with a?
I generally spend an hour with a first-time homeowner, and that's about all. Obviously, your brain, you're zoned out after that point. I love the sound of my own voice, so that's normally the end of that. And then there's follow-up, though. It goes on. It's a conversation, and I tell people, even if you don't use me, I'm happy to invest this time and make sure that you know what you're doing. And I tell everybody, and I tell every realtor I know, it's really important to work with a local lender that is accountable, that you can go to not just before and during the transaction, but after the transaction. When you get that first supplemental tax bill, or you get, a question on your homeowner's insurance, and you need help with that, and whatever it is, you need to have. ChatGPT doesn't do that. So whatever our current generation is thinking, that's the wrong answer.
Yeah.
Well, you used the word hope, Hal, and I can tell you that when my daughter and son-in-law had their first meeting with Ben, they walked away with more than hope. They walked away with more hope than when they walked in, but they walked away with a plan, and they walked away committed that they could do this. And within weeks, they executed.
How
And
exciting.
They've been in their first house for almost a year. The payment sucks because it's really high, and they've made every single one of them.
Yep,
Their
they're right.
incomes have gone up. They love being a homeowner and calling it home. I'm not living in somebody else's house. I'm in my home.
Yep. I spoke to somebody yesterday similar to your daughter, and same thing. I just asked them how it was going. They called up because they got their supplemental tax bill, and which everybody is now receiving right now.
Yep.
And it has been 6 months since they moved in, and it was a struggle for them figuring it out and making it work. They closed on an FHA loan, and I asked them, and they said, "Ben, we love our house. You know, we never
Yes.
thought we'd get the impact of having a home and understanding it's ours, and
Didn't think we could ever do it.
we didn't think we could ever do it." And they're just so happy, and their home has appreciated. And when we refinance, we'll probably be doing conventional financing because they have equity. And, you know, just so many things. And I love hearing that stuff. So
Well,
those-
Ben, you're welcome, because my daughter called me about the supplemental tax
Yeah.
bill and not you.
I love it.
Yeah, send it to Ben. He'll pay it.
Yeah, there you go. Goes, do we owe this? I go, yep, you do.
I will add just to what Hal was saying earlier too, to the initial objections or to the feeling of I'm not ready to meet with a lender yet. It's important to understand that my job is to get you ready to buy. So to step into my office, if you have less than perfect credit or you have debt you're still paying off, meet with me and we can have a discussion and figure out the best way.
What's the longest relationship you've had with somebody before they actually hit the go button?
Oh gosh, I'd have to think about. I can think of a few people where it's several years, and that happens, and that's okay.
But you got them ready.
Yeah,
Yeah.
yeah.
I'll comment on this because we talk about it as real estate agents. You know, having a great lender is critical, right? And the scale goes all over the place. And, you know, like we get offers from people and they say, oh, well, my friend or my family members in Orange County and they're a lender. And I go, great. They could be the greatest lender ever, but they're at a huge disadvantage and they're an unknown quantity. Now, it's not my job. It's their decision to pick a lender, but they just don't understand the detriment, because if somebody else is making an offer and they get a pre-qualification or a phone call from a great lender like you, and then you know, okay, it's a done deal. From someone else, we just don't know. And I mean, we've had things that lenders had 30 days with a loan. They go, oh, we didn't check this one document. Now we can't underwrite the loan. We can't do it. We give them someone here, and in 5 days, it's turned around, right? And so the picking of someone shouldn't be based on whether you go to the bar or you're related or you're friends. You know, you should kind of vet it out. And oftentimes a realtor can recommend one, a lender can recommend a realtor because they know each other.
Yeah.
It's
and
a
it adds
you know,
a competitive edge to your offer. It really does.
without a doubt. Yeah, and a security. Right? Because who wants to spend 30 days and then your transaction's in jeopardy, and nobody likes those surprises. So do it. I hate to say this, but you know, maybe talk to a couple, right? Ask around for sure, right?
Well, I think it's great to speak to. It makes me. I feel that's a strength. If you speak to other lenders, I'm confident enough in that. So I like that.
Yeah.
And I'm going to turn it around and say it's the same thing. The average borrower or client doesn't understand what a lender does. And they think it's just about the rate.
Right.
And that's 100%.
Yeah.
Just like they a lot of the times don't understand what a good realtor does compared to Joe Schmo realtor.
Right.
And that's always an effort to educate those people so that they understand.
I think that's a great way to finish our episode today. We're just about out of time. And hey, thanks, Ben.
My pleasure. Thank you for having
Thanks
me.
for coming 2 weeks in a row. This
My
has been
pleasure.
great.
Yep.
Pleasure.
So I'm saying it here on camera, Ben. I'm going to make an appointment with you and start the process.
I love it, James.
and get rolling.
I love it.
I have to move again. I'm a renter, so I'm done. With
We're
it.
going to meet face to face in the office.
I'm over it. I'm over it. Yeah,
Way to go.
let's do it. Yeah.
Way to go.
So it's just starting, just like you're saying.
I called Michelle Figueroa from the other day, or a month or two ago, the organizer. So she's coming to my house
Oh,
too.
good.
So
I love it.
I'm stepping out too. I'm just telling you. On a limb. I'm gonna get my house organized.
Well, Jeff and I were just talking about maybe getting an organizer in here and setting up a new podcast studio thing. So
News
yeah,
to
we,
you.
we might as well.
The one with the row of.
I love spending
kegs
Hal's money.
with the
It's like,
keg
wait,
things
what?
in the back. Yeah.
Let's do it.
I found that it's really easy for me to spend Hal's money. That's the easiest thing
We
I've
want to
ever
be on
done.
the
doing
stage
that.
like the NBA or the NFL
Yeah,
or pregame
yeah.
show.
Just the
up
lights
here,
on the
with
floor.
the crowd behind us.
I wanna be
The
Charles.
game. Yeah,
Yeah.
Charles Barkley. Okay. All right. I'll be Ernie.
So real quick, we played the numbers game last time. How many follower or subscribers do you think we have now? Any guesses?
What was it last time?
Well, I'm not telling you.
40,000.
JT says 40,000.
42.
42,000.
Like people who have
Subscribers.
had to click on
Sign
something.
up.
saying
People
they
that
wanna
have
hear it.
clicked.
That have subscribed to the
Actually,
It was like
clicked on-
7,000 at
Because
the
of
turn
you,
of the
Bob.
year,
I mean, my
right?
dad's only one, so I don't
At
know.
the turn of the year, it was just
7,000?
just over 1,000. It was like
Over 1,000.
1,200, yeah, at the end of the year. Bobby, what do you
Let's try
got? We got 40, 42.
I mean, 40's a great
40's
number. I would
yeah.
go with that. That's great.
Ben, any idea?
37,800.
Wow, I like
it.
that.
You are
Jeff?
I do I have to recuse myself because you sent me a text message earlier this week. Is that
Well,
is that
go
pretty
ahead.
much?
What do you got?
Well, last I saw it was 44.
44. I'm looking at it right now. You ready for this?
Sure.
52,458.
Wow.
Who are these?
52,000.
52,458.
Real estate enthusiasts. Bobby.
Congratulations.
Or all the employees of Ren Spooner. Every week.
So on that
great.
note, yeah, thank you everybody who listens to our podcast. Hopefully we can keep bringing amazing guests like Ben on to give you more good information. Make sure you follow, like, and subscribe to our podcast on YouTube and
On wherever you get your podcast, just subscribe to the SLO County Real Estate Podcast. It's a great commute companion just to kind of keep an ear on what's going on with the real estate market in San Luis Obispo County.
yeah, and beyond. I think a lot of it applies.
Yeah, no,
elsewhere.
it does.
Yeah,
From a
and
California perspective, even.
yeah,
that's
for
great.
sure. All right, guys. Thank
All
you
right,
so
thanks.
much. Okay, we'll talk to you
Thanks,
later.
Jeff.